How to reduce your tax burdens, keep more of your money, and make smarter financial decisions all year long. Hi, I'm Alexander W. Elliott. I'm a certified financial and tax advisor. This is some of the things we're going to talk about today. First one is why most people overpay taxes. Most taxpayers, especially business owners and retirement-ready individuals, overpay the IRS every year, not because they're careless, but because the tax system is complex, reactive, and built around annual filing instead of year-round planning. Okay? This gives you this guide will give you the same foundational strategies I use with my clients to help them reduce their tax stress, avoid costly mistakes, and legally keep more of their money. 2, the psychology of taxes, why people miss opportunities. Understanding taxes isn't just about the numbers, it's about behavior. Okay? Here's the 3 psychology traps that cause people to overpay. 1, the once-a-year mindset. Most people only think about taxes during filing season, but then it's too late to fix anything. Okay? 2, avoidance and being overwhelmed. The tax code feels intimidating, so people avoid it. Avoidance leads to missed deductions and poor planning. 3, my preparer will handle it. Tax preparer file returns. Tax strategist plans ahead. There's a big difference. This guide shifts you into a proactive mindset. Okay? 3, the 5 core tax strategies every taxpayer should use. These are the pillars of tax planning: simple, legal, and effective. Okay? Strategy 1, track your deductions year round. Very important. Most missed deductions happen because people don't track their expenses consistently. Key deductions people forget: home office, mileage, business meals, software and subscriptions, continuing education, retirement contributions, and medical expenses when applicable. Okay? Action steps. Use a simple monthly checklist or app that tracks expenses as they happen. There's some good apps out there for that. Strategy 2, choose the right business structure. That's very important. Your entity type determines how you're taxed, what you can deduct, and how much you can keep. Well, how much you keep. Common options: sole proprietor, LLC, S Corp, and C Corp. So there's 4. When a S Corp makes sense, when your business earns enough to pay yourself a reasonable salary and take deductions, reducing your self-employment tax. Okay, that's one tidbit there. Strategy 3, use retirement accounts to reduce your taxable income. Very important. Retirement accounts are one of the most powerful tax tools available. Yes, it is. Your options include traditional IRA, Roth IRA, SEP IRA, solo 401ks, and of course there's employer plans. These accounts can lower your taxable income, grow tax-free or tax-deferred, build long-term wealth, and in some cases, generational wealth. Okay, strategy 4, leverage credit, not just deductions. Credits reduce your tax bill dollar for dollar, or deductions, they don't do that. Common credits: child tax credit, educational credit, energy home credit, EV credits, small business healthcare credit. Okay, dollar for dollar deduction. Most taxpayers miss credits because they don't know they exist. You know? Strategy 5, plan quarterly, not annually. This is very important. Quarterly planning helps you adjust your withholdings if you're employed or your estimated taxes, and that will help you avoid any penalties. Make strategic moves before the end of the year. Okay? Action steps. Start a reoccurring tax review on your calendar. Okay, reoccurring rather. The tax health snapshot, your personal tax scoreboard. Use this simple framework to evaluate your tax situation. Okay? Your tax health score. 0, no planning, only filed once a year. 1, you have some deductions that you've tracked. 2, basic retirement contributions. 3, quarterly planning. 4, entity structure optimized. And 5, full tax strategy with year-around planning. Wherever you are at now, this guide will help you move up the scale or scale up. You know what I mean? Okay, 5, the top 10 tax mistakes to avoid. Only thinking about taxes during filing season, not tracking your expenses, missing credits, not choosing the right entity or business entity, poor record keeping, that's very bad, not planning quarterly, mixing personal and business finances, that's called commingling, you don't want to do that, not maximizing your retirement accounts, filing late, 10, not working with a strategist or advisor that can help accomplish those things. 6, your next step, get a personalized tax strategy. But this guide will give you the foundation, but each situation is unique, obviously. If you want a personalized tax plan, a tax health snapshot, year-round support, quarterly projections, okay, and a clear strategy to reduce your tax burden, you can schedule a consultation with me using the link below, okay? And also to download the guide, use this link for that. So again, but thank you for attending. Don't forget to download your free tax guide. Again, my name is Alexander W. Elliott, Certified Financial and Tax Advisor. So have a great tax season. Hope it comes out satisfactory, and have a great and blessed rest of the year. I look forward to talking with you. Thank you.